Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. It's been kind of an interesting week, and I seem to say that all the time, but the fact that we have got grains where they have been trading and the cattle are oblivious to what's going on. Maybe, maybe not. We're going to find out why they're not reacting like many thought they should, waiting on cash as we record this on a midweek, and what we're going to see. Now we're past Mother's Day, which means grilling season can officially be in session. You can see joining us this week is Joe Kooima. Joe is with Kooima Kooima Varilek out of Sioux Center, Iowa. So I kind of want to start there because on a Wednesday trade, as you and I are recording this, there were some big struggles in the grain complex, and the cattle just seems to have these blinders on, and they're really not reacting to what's happening on the grain side.
Yeah, it's definitely a huge money flow when we look at the grain side of things. 3 weeks ago, just shy of 3 weeks ago, we had corn. The funds had a little bit of length there, and they've completely flipped into a different mode here where they're huge active sellers by the thousands, if not tens of thousands. So definitely a huge money push there. The trend is their friend in that market going down. So they're not too afraid to gather momentum there, and they're starting to build some of the largest short positions that they've had in quite some time, especially for corn, probably in the last 2.5 years anyway. So it's a redirection in the grain prices here since about 2.5 years ago.
So looking at that, why hasn't the cattle reacted? Like in past weeks, we've seen them take advantage of big drops in the grains, and it just doesn't seem to be fully happening, especially looking at these feeder cattle.
Yeah, the feeder cattle, I can make sense of it a little bit today. We look at that chart, and since last week, we've had almost a $9 or $10 rally in some of those deferreds, and that was before corn really had this last gut check low. So technically, maybe the feeders need just a little bit of a backup to have to keep that market healthy. It can't just go straight up forever, just like corn. Probably just won't go down straight forever either. But the day-to-day stuff, maybe scratch your head just a little bit. Doesn't seem like the cash in the auction barn seems to slow up at all. But it's a futures market. It's heavily priced out there, but like I said, even when corn was down 12 cents, feeders maybe came off their lows from 80 cents to 10 cents lower, but just couldn't get any more momentum there. So I would say just the short-term overbought status for the feeder is probably hindering it to a certain degree there.
That old saying about what comes up comes down quite twice as fast. And luckily, this cattle market hasn't taken as huge of a dump as maybe somebody thought they would as fast as we saw the climb.
Correct. Yep. When we look at the overall fundamentals with the cattle market, it's hard to say it's just one and done. We're off of our highs for the cash, from 3 weeks ago, well, probably almost 5 weeks ago now, but we didn't exactly turn and burn. But I think that's just the overall fundamental approach that numbers just don't come around the corner, especially with the cattle cycle. We still, are in the midst of, some old crop type stuff left, but we're starting to dabble into some of the true new crop calves down the pipe here.
Well, there is some positivity, especially when you look midweek, and the fact that the live cattle on the nearbys are definitely continuing to push to some positive numbers.
Yep, we got nice leadership from the bull spreads today with the cattle. There was one instance here this morning when everything was wrecking, hogs included. Feeders went down over $1. Fat cattle were down 80 to 90 cents, and all of a sudden it stopped and recovered real quick. And I think that just points to the fundamentals. You're starting to hear some bids out there, some in the north coming out fully steady at that 177 mark. The south, their asking prices are up there at 172. The bids are 168, 169. So there's a little bit of a holding power here that the producers have, saying, no, we're not going to give up our cattle right now. If you guys are in the hunt for them, you're going to pay us up. And we're starting to feel that a little bit. Cash this Wednesday, sitting here at a fully good steady to start with last week, some 280 in eastern Nebraska, a little bit of 177 up here in northwest Iowa, but nothing to establish a true cash market yet.
Is it something that's going to probably be pushed off until Friday, knowing we have a cattle on feed report coming out?
I think there's a lot of truth to that. I mean, both the producer and the packer would play that into their hands to a certain degree, but it seems like the last couple months anyway, we've been holding out for cash at the end of the week, which I think is a good sign that producers are saying, no, we're going to get higher cash prices for what we have. We all know what the fundamentals are, and we're tired of losing money, and the Packers just might have to take their turn at having a little bit of that printed red ink for a little while.
And finally, what's your thoughts on this cattle on feed report? Do you have any early inklings as what we might see come Friday?
Not a whole lot of data yet here in front of us. You're probably going to think that some of these placement patterns could go down a little bit. Sometimes that south will still have a little bit of a higher placement pattern, and we're just not quite had a lot of moisture the last little while, which is going to be favorable for holding some cattle back on pasture and whatnot, but that's all in front of us yet. So maybe this placement pattern could be just a little bit heavier, but not bearish by any means, still below the last couple of years of numbers, but maybe don't be surprised to see something like that come out of the south anyway.
Well, finally, as we wrap up, what's the one thing you want to keep an eye on as we finish out this week and head into next trading week, which leads into a holiday weekend?
One thing to keep in mind here, I guess we're always going to have our mind on some of this outside markets with interest rates and stuff like that. So even at these good prices that we have, whether it's for some feed need stuff in case the corn market bounces out of this little funk, that our national base is still pretty strong. So make sure we don't let that get away from us again. But these are great prices to have in cattle, and whether you protect yourself with a part of the pen with some future options or some put options, because there's always something every day. And I don't want to be a Debbie Downer about this by any means, but there's always something every day that can just kind of bring the market down and humble us just to a certain degree.
Good advice. Well, thanks so much for joining us this week, Brad. I'm so used to Brad. Thanks for joining us this week, Joe.
Not a problem. I appreciate having me on.
All right. Of course, Joe Kooima is joining us this week for Cattle Call. And as we always remind you, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.